Okay, and with that, of course, we're watching Boeing stocks very closely and seeing what's happening with the markets. Good morning to you, Mike.
Yeah, good morning, Melanie. We're watching Boeing shares right now down 3%. That's on top of the 10% the company lost in share price last week. And that, in dollar terms, is more than $40 billion U.S., with a grand jury now being formed to help in the investigation of the Ethiopian Airlines crash. Some questions being raised by the Wall Street Journal this morning from company insiders. Did Boeing have too much sway at the Federal Aviation Administration when it comes to the certification process? The questions being raised about the similarities between the Lion Air crash and the Ethiopian Airways disaster with the software upgrade. Will that be all that it takes? Likely not for Boeing to get this plane recertified. Lots of questions in the time frame for companies such as Air Canada and WestJet, which have grounded their MAX 8s and MAX 9s. When these planes will be back in the air, that is the big question mark, and it continues to pressure the share prices in these related companies, along with Boeing today, down another 3% pre-market. This is Budget Week in Ottawa. Tomorrow we will hear the fiscal framework of the federal Liberals as we go into election campaign mode over the course of the summer and into the fall. The budget talk in the early stages this morning is about giving some help to millennial home buyers, perhaps, some job skills training for older Canadians, and the labor market's been very strong. And that means more tax revenue coming into the federal government, and that is likely going to lead to a lower than projected deficit. So maybe more spending initiatives by the Trudeau government to distract perhaps from the SNC-Lavalin affair. What won't be in the budget, we're reading in the Globe this morning, is tax reform. There's been a lot of call for Canada to become more competitive from a taxation framework. That is not expected to be included. And Roger, this morning we are looking at the stock listing for Lyft. The second biggest ride-hailing company has made it official. It will be first to market, sort of jumping ahead of its rival Uber, which is also expected to list its stock price sometime this year on Wall Street. The estimated market value for Lyft is $20 to $25 billion with a B, and Uber is said to be worth $50 or $60 billion. So these companies, new technology and game changers, certainly in the taxi market space, but worth big bucks. And it's going to be interesting to see if people buy into those share prices, which are expected to go for $62 to $68 when they become public in the next few weeks.
Amazing, isn't it? Yeah. Essentially a hard drive.
Yeah, it's just an app, right?
Yeah.
And it's worth billions upon billions of dollars.
Where did we go wrong, Mike?
We did not come up with the idea.
Oh, my alarm's going off. Hang on.
Uh-oh.
Got to hit snooze. Did you hit snooze in the morning?
Yeah, well, I've only got about 9 alarms that go off.
Yeah, well, same here, but I hit snooze a couple times. Coming up after the break, Mike, we're going to tell you why it's not good to hit snooze. Thank you, sir. Have a great one.
You're welcome.
That's coming up on BT.